Welcome back. It's a great time to book a holiday in Japan. The Aussie dollar has surged to a 10-year high against the Japanese yen. Currently, $1 is buying roughly 102 yen. So why is the yen so weak? Joining me now is Stephen Dooley, Global Head of Market Insights at Convera. Steve, thanks for your time. What's driven the yen down so much, not just against the Aussie dollar, but other currencies as well?
Yeah, look, of course, right around the world, we've seen central banks raising interest rates because of high inflation. But Japan and China are the two major economies that haven't needed to raise interest rates. Inflation isn't a problem. In fact, the Bank of Japan took its first step to raise rates back in March. It moved rates from negative interest rates to just above zero. So in FX markets, interest rates are really a key driver of valuations. And the fact that while most central banks, most economies around the world have seen interest rates higher, while Japan has kept rates broadly steady and only just recently started raising them, that's caused their currency to underperform. And like you say, it's been substantially weaker versus the Australian dollar, but the main focus has been its weakness versus the US dollar. So far this year, it's down 14% versus the US dollar. It's down 50% over the last 3 years during the US dollar. And it's a really clear sign that the fact that Japan has been one of the last major central banks to raise rates has really impacted their currency.
And then just specifically with the Aussie dollar versus the yen, decade highs, how long are you expecting things to stay like this?
Look, historically, and if you go all the way back to the early 1990s, once the Australian dollar Japanese yen pair got up towards that 100 level, it's tended not to last there very long. And if you look back at the major historical periods when we got up to that level, around 1997 during the Asian financial crisis, during the post-GFC period, when Australian interest rates were much higher than anywhere else in the world, and then in the middle of the 2010s, when central banks around the world were mainly printing money, but Australia had still kept interest rates relatively high. So historically, it hasn't lasted very long, and we've already seen the Japanese government step into currency markets to try and push the Japanese yen lower. It's certainly too low for the comfort of the Japanese government. So it might be the case that, like we've seen on every other occasion over the last 35 years, that the Australian dollar isn't able to stay at these highs versus the Japanese yen for very long.
All right, just looking elsewhere around the world, why is the US dollar, it just seems to be going from strength to strength right now?
It absolutely is. It's had a dominant period over the last 4 or 5 months, and that's really because the US economy has been the best performing economy in the world, certainly the developed world, in 2023. The labour market has remained very strong, but most importantly, inflation has remained stubbornly high in the US. We started the year with most forecasters thinking that the Federal Reserve would need to cut interest rates, and financial markets actually thought that the Federal Reserve would cut rates 6 times at the start of the year. That's been completely eliminated from financial markets, that view. In fact, I think there's a 25% chance that we won't get a rate cut at all. Of course, interest rates critical to currency valuations, and that's what's pushed the US dollar higher for most of this year. And we're now only 5% down if you look at the US dollar index, which is the barometer you use to measure US dollar strength. We're only 5% below what's the best period since the early 2000s, back during the technology boom. So it's a historically rare period for the US dollar to be quite so strong.
Yeah, Aussie dollar's buying about 64, 65 US cents at the moment. If the Fed does keep rates on hold for the rest of this year, does that mean we can expect the Aussie dollar to kind of remain hovering around the current level that it's at?
Yeah, absolutely. It's really a US dollar story here in financial markets at the moment, and most currencies have weakened, particularly throughout Asia we've seen particular weakness between the major currencies in Asia and the US dollar. So if the Federal Reserve continues to look at the US economy and decides that growth is too strong, the labour market is too resilient, and inflation is too high, then it means that they're less likely to cut interest rates, and that can certainly support
Thanks
the
so much for
US
your time,
dollar.
Dave. Appreciate it.
Thank you.